Hi, this is Michael Adams for CEORoaster.com, and as you know, I'm constantly looking for interesting investment opportunities for you, but also, of course, for myself. And yeah, we had some pretty good success with one of the companies out of the diamond sector, and that's Dunedin Ventures, DVI on the venture. And yeah, I think I picked the company up, or I did my first video interview with Chris Taylor at around the 6 or 8 cent level. Company, I think right now is trading at 28 cents. Yeah, so that was a good success for all of us. Yeah, congratulations if you joined me. And of course, I also monitored some of the other diamond deals around. Yeah, Lucara, for example. I'm sure that you are aware of the really huge performance of the share price. And so I was kind of, talking to my network what might be another interesting diamond deal. And one of my friends from the investment community in Germany pointed out a company that's fairly early stage, but has some good potential. It's Margaret Lake Diamonds, trading on the TSX Venture as DIA. And so I asked Paul Brockington, who is the president and CEO of the company, to join me for a quick video interview. And stay tuned, and I hope that we can figure out why the company might be a good investment for you. Hi, Paul. Thanks for taking the time to talk to me. And maybe as a quick starter, can you give us some background about yourself?
Yes, sure, Michael. It's a pleasure to be talking to you today on behalf of Margaret Lake Diamonds. I myself am actually a graduate mining engineer. I graduated in the UK, and I worked in the mining industry in Canada and Africa, starting in Africa and then subsequently came to Canada, where I've spent the rest of my career. After having worked in both underground and open pit mines, I moved on into the area of mining finance. And I spent some 10 years heading up Canada's major brokerage firm in the area of mining research. So I led a team of people in the mining research area. And that broadened out my experience from being a mining engineer to also having financial background experience and securities experience. From there, I went on and I did consulting work for governments, and I've actually chaired a provincial crown mining corporation in Canada. Okay. For the last 20 years, I've been an independent consultant working for myself. In reality, the diamond play in Canada began some 25 years ago. And I was actually one of the first people to recognize it and talked on a panel of 3 people at the first international conference where they had a diamond session. Okay. And at that time, people were very skeptical of diamonds in Canada. And I talked to a fellow called Chris Jennings, who was president of Southern Era, and a big name newsletter writer at the time from the US called Bob Bishop. And we all knew each other. We all had our subjects. We agreed what we were talking on. And that time I did an evaluation of Diamet that went on to be a stock that went from pennies to $60. And and at that time, there was no mine in sight. I mean, they discovered a diamond deposit, but I was at a very early stage telling people how valuable a diamond asset could be. And since then, we've seen that diamond companies can trade up into the $1 to $2 billion range. If you look at Mountain Province today, which is adjacent to us, it's got a 49% interest. It's trading at around $1 billion. Therefore, for the 100% interest in that mine, you can say that it's capitalized at around $2 billion for the mine. So those figures are very big figures, and that shows that can be achieved. Was achieved with 2 diamond companies in Canada, but Diamet and also ABA, which is now called Dominion Diamonds. Some of these things change names over the years, but we are literally at the 25th anniversary of the diamond play. I recognized it personally. I was also an investor in it, and continue to invest in both my own company and other diamond equities in the space.
Right. Yeah, and I saw that diamonds are really like a trend and a hot topic, investment topic in Canada. Not so much over here in Germany, right? The Germans are still focused on gold and silver and some of the base metals, which I think is a mistake. Yeah. But yeah, I remember the times from the first diamond rush. Yeah. And I think Chuck Fipke was always kind of the guy
He was, and they're actually holding a dinner in a couple of weeks to celebrate the 25th anniversary of the album.
Okay. Yeah, that's cool. Okay, yeah, so tell us a little bit, like maybe an overview, the big picture of what you have right now as a project.
Okay, so let me go back to how I actually acquired this project.
Okay.
I've got land surrounding Kennedy Diamonds that's got an advanced exploration project, and again, Kennedy surrounds Mountain Province, which is a mine now in production, heading towards commercial production probably in January. So Kennedy Diamonds was spun out of Mountain Province in 2012. In early 2013, Kennedy Diamonds was drilling out some old deposits known to exist called Kelvin, specifically, and Faraday on the northern part of their property. And they were meeting with some very significant success. And I suddenly realized that there was this surrounding ground around Kennedy Diamonds. And I knew the people that had this. It was two men who reside in London, England. So I flew to London on a Saturday, negotiated with them on a Sunday, shook hands Sunday night, and stayed in London for a couple of days and signed a deal to option this ground. Another Canadian diamond entrepreneur was chasing it on Tuesday, but I locked it up Sunday night. Okay. I flying to London on the weekend. I just wanted to stay here and do it on paper. My lawyer said, you better get on a plane and go, otherwise you won't be getting it. So I got on a plane and went to London. So fortuitous part was that I knew one of the individuals who had the property very well. And it's interesting, these people were taken on a trip to Mountain Province in 2011, went back to London and asked Mountain Province's consultants to stake them like a block of land, about 20,000 hectares of interesting land. And it's that land that was staked. They sat on it for 2 years and did no work. So I entered into an arrangement with them in December of 13, but by January of 14, you had to post a bond or this ground was going to lapse. So I posted that bond in a private company I had, and subsequently went on to take Margaret Lake Diamonds public in a shell company. And what we did that year, we flew what is called an airborne gravity gradiometry survey, which is one of the most advanced geophysical techniques. It's expensive, but it is a good technique for looking for kimberlite deposits. And kimberlite is a rock in which diamonds are found. We did that survey. We did airborne bathymetry to determine the depth of lakes. We spent a lot of time on getting interpretations, and quite honestly, the project went a lot slower than we anticipated because of technical challenges with the geophysical system. So it sort of delayed our program and evaluation. We also did some till sampling that people will have heard about in the diamond space, but our primary tool is this gravity geophysical survey and the modeling on that, where we actually have used a consultant who also did work for both Kennedy Diamonds and De Beers in the past in that part of the world. So we've got a very knowledgeable consultant working for us. The other thing that I have, my vice president of exploration is a fellow called Buddy Doyle, who is the manager of exploration on the DIA.V project, which is now the mine where Dominion Diamonds is today. So we've got a strong team. We've got Paige Varshney as a director, and he is also a director of Mountain Province Diamonds, which is the new mine in the joint venture with De Beers. So yes, we hadn't done anything for a year. It became difficult to raise the monies, but this year we've seen the opportunity to sort of move forward and head towards a drilling program. The targets here are generally under lakes, so a program for drilling would be in the winter, spring of 2017, and that is the work we are currently planning and starting to put the monies we've raised towards that project.
Okay, and yeah, coming back to that you raised money. Yeah, I think you announced the private placement late September, and the stock was trading at around 12-13 cents. And I'm a little bit familiar with the market. So usually, if you announce a private placement trading at 12-13 cents, and the placement is priced at 10 cents, the stock drops. Your stock went up on the same day like 50%, up to 18 cents, around that, right? So why is that? Do you have any explanation for that? I know there's.
I think that two things, yes, to bear in mind with regards to this company. This company had about 32 million shares outstanding when we announced that financing. 16 million of those shares are controlled by insiders. 16. So, in other words, we haven't got a 32 million share float. We've got and of the other 16 million shares owned by other investors, there's some very strong holdings in that as well. So I think when we announced the financing, yes, it was trading just in the low teens, but the financing we announced was at 10 cents. And that's the same price as we went public in 2014. And I believe people perceived this as an attractive price because they could now see that we were headed towards the potential for a drill program. We were initiating the financing, which would move to the next stage. And now with that financing complete, we still only got a market cap of $7 million, which in essence, when you've got a market cap on the property next to us of a couple of $100 million, admittedly, it's got a resource, and we'll see evaluations from them and some other information on their resource here in the next few months. So I think we've got very prospective ground. We've got 12 defined targets on this ground, and where we need to move ahead. You need to conduct a drill program to determine initially have we got kimberlite. That's what we're aiming to do in the drill program going into spring.
Yeah, but I agree. I think that probably, yeah, the market, when you announced the financing, no matter what the price was, I think the market might have assumed, okay, now the company starts moving towards a drill program, yeah, and only a drill program creates real value for the investor. But on the other hand, yeah, a lot of the movement of the share price sometimes occurs before the drill rigs are even turning. Right, and
Yes,
it's only six. It's only, I think you're planning to do the drilling, as you said, in the spring, which just brings you into March, April, I guess. Right?
Yeah, we probably start in March. That's the plan, and the reason for that is people would ask, why can't you go in the winter? Because at this time of year we're heading towards 24-hour darkness up there, and it's too dangerous, difficult, and costly to try and run the type of drill program we have to. If we were just drilling in one location, yes, it might be possible.
Okay.
We will wait for the winter road to go in that goes to the Gachokwe mine. We could use that to take in fuel, materials, our camp, and everything. So we're actually very well located because we have this winter road that passes right by where our campsite will be, right through our property.
Yeah, and I think again, based upon the companies that are surrounding yourself or your project and the results they had, as you just mentioned. Yeah, the one company like how is it called? Kennedy. Yeah, so they have a huge market cap. So I think that the investment community is just assuming if you will be able to only have like even a fraction of the same results, right? That your market cap is, as you said, is 7 million. It's way too low, and they're just putting a bet into this, yeah, based on, of course, your team, yeah, and Diamond as being, a hot sector right now. And I think the price trend for diamonds worldwide is going up. That's right, yeah?
It is going up, and it's maybe 20% off its peak. But the thing to remember about diamonds, you don't have a market every day as you do for gold, or a market by the minute as you do 20
I know,
around the world for gold these days. So you have the high volatility in gold, copper, lead, zinc. But diamonds it's still not a cartel today. De Beers doesn't have the same hold that it had 20 to 30 years ago, but still they're really only a handful of players, and the diamonds can be sold. There've been some very successful companies. One Canadian company you might have seen is Kara in Botswana, where they had over
with its
1,000
huge, yeah.
Yes, well, that stone hasn't yet sold, but I think that stone will sell in excess of 75.
Wow. Now,
So
again,
diamonds are very valuable.
yeah, no, again, I think, yeah, maybe the German or the European investment community is kind of missing out on this diamond trend, yeah, while the maybe smarter investors in Canada especially, yeah, they are just already on the train. But having said that, let's give us please a little bit more details about the drill program. So you said, okay, you were going to start in the spring. So how many meters are you planning? Did you already identify the drill targets? Yeah, give us a little bit more insight. How many meters?
The drill targets are very well identified by the process that we did. And once we did these surveys that I've explained, we also did some computer modeling of these with our consultants. So we modeled a number of these targets. And normally when you do this, you tend to lose some of them. We actually didn't lose some, and we picked the 12 best targets. Okay. 11 of these are under lakes. So that's why you want to put in vertical holes, and the time to do that is from the ice. If you could drill in summer, but you'd have to set up back from the shore of the lakes from environmental purposes. Drilling shallow angle holes, it's much more difficult. So the optimum way to drill is to sit up on these targets. And we believe with the technology today, it's so accurate that we believe our targets are very accurate. Defined. We may, in fact, when we get there, we may do a little ground geophysics on some of the targets to actually prove to ourselves that they exist. But on one target, we've actually got some historic ground data, and everything matches extremely well with the airborne data. So we're quite happy with the 12 targets, but you need now to go drill. The first thing we want to see improved is the fact that we actually have kimberlite. In other words, that is the rock type that hosts diamonds. That's the first process. So it's not to go there and outline the total tons that we have at this stage. We want to be able to look at these 12 targets and then analyze any material, hopefully kimberlite, that comes from these, and then plan as to how we would move on from there. So this is our first process at this stage.
Okay, and how many meters do you plan to drill?
We haven't precisely defined the meters, but it would probably be a few thousand.
Okay.
But we haven't set it. We haven't set it in stone yet. We have not actually let the contract. I mean, if, for example, we got encouragement, real encouragement, we might want to specifically put more holes into one target if we all of a sudden met with some very encouraging success. And I mean, we will prioritize how we drill the targets. Well, if the first hole happens to come up with some very interesting material, it's quite conceivable that we might stay on that location before moving to another one, because you don't want to keep moving kilometers away if another hole is warranted. In other words, it's already in that area. So it's a process of managing the program once you're up there in the most efficient way. And I believe we've got the skill, talent in the form of our VP of Exploration, as I say, who managed the DIA.V project, the exploration there. He was the manager there from sort of the beginning all the way through the real exploration phase of that successful mine.
Okay, and is like the money you just raised, is this enough to cover the budget for the drill program, or will you need to do another raise?
Okay, so the two things we did when we recently we announced that we've closed the financing, and we've got about 4.5 million warrants outstanding, which were priced at 25 cents to be exercised at 25 cents. We've reduced the price of those to 20 cents to the end of November, and then if an investor exercises those, they would then get another warrant at 30 cents. So we've incentivized people to try and get those warrants. So if all those got exercised, for example, it would put close to another $900,000 in the treasury. The other thing that we will look to going into the closing of the year in Canada, the sale of flow-through shares is attractive as a tax feature to Canadian investors. I know not to you, but Canadian investors. It saves them paying a little to the tax man. We all hate in any jurisdiction, I believe. So I believe that we will be able to raise additional monies in the form of flow-through going into the months of the year. So that is our objective, and is to have the adequate monies to proceed and have a look at what we think are really prospective diamond targets. The other thing I would say is that if we meet with any success in that part of the world, it's likely that we will attract the attention of one of our next door neighbors as well, if we have any success. Because there's one mine there, maybe Kennedy will build a mine as well, and anything that's good, clearly, I think, would likely be of interest. But the good point is that still today, we have 40 million shares issued. There's still over 16 million controlled by insiders, and as I say, there's some other large positions as well. So in essence, we have still close to 50% controlled by very few people. I mean, when I say the 16 million shares, basically it's 3 votes, and I pulled the trigger on 2 of the votes on a personal behalf. So it's not a. I'm not saying that I own all the shares, because 6 million of the shares are in a private company where I am a major shareholder, but I'm not a shareholder. So, I think, as I say, we've got a strong structure. The other thing I would say in terms of mining companies and junior mining companies, we have a very effective cost structure. I work for $1 a year. I do not work for any salary.
Okay.
That's
good.
My vice president of exploration is paid by the hours that he now puts in. So that's the way I'm at. So we have, in essence, probably one of the lower cost operating junior companies on the venture exchange in Canada.
Oh, that's really interesting. And okay, I think that was a good overview. And actually, you took away my last question, because my last question would have been, what's kind of the end game, right? Is it to really bring it into production, to develop it towards a stage that some other company is taking it over, or forming a joint venture? So, I have this crystal ball here. Yeah, and yes. I want you to look into the crystal ball and tell me what's your best case end game.
So, I mean, obviously the best case end game is to find one or more economic diamond deposits that clearly could be taken to production. It is certainly not my objective to take those to production myself in that junior company. I believe, as I say, with surrounding people in the area, or even another entity. For example, Stornoway Diamonds has just started the diamond mine in Quebec that's cranking up to capacity here very successfully. I know that Stornoway's ambition is to grow as a Canadian diamond company. I'm not saying I would be of interest to them, but if they want to grow and I had success, it's possible that I would be. Probably the groups that could pay the biggest premium or be most interested are likely those that are the neighbors from Margaret Lake Diamonds today. In other words, either Kennedy Diamonds, Mountain Province, and/or Mountain Province and Beers as a joint venture. They clearly are. And the one other thing, Michael, I would say is that Margaret Lake is a diamond company. We stayed as a diamond company since inception in 2014. We haven't wandered off to look at the hot commodity of today, be it graphite or lithium or anything else. My belief and my focus has been diamonds, and I would say that I still continue to look at other diamond opportunities, and specifically, I don't really want to venture outside of Canada. So in other words, I am looking at maybe other opportunities that we may be able to gain access to in Canada. And quite honestly, the good part is that there is not a lot of competition. I think gold has siphoned off a lot of the attention and money, and it's a very expensive area to operate here. We're 300 kilometers northeast of Yellowknife. It's remote. As I did mention, we do have a winter road there, only a winter road. And I think that we haven't got a lot of competition, and I think there may be other opportunities that we can look at to sort of expand our base moving forward, and also that would give us other opportunities if, I say only if we were to have basically Margaret Lake Diamonds, the current property, sort of prolonged investigation, taking time to prove up, we might find something else that might move them on faster.
Okay. No, that's really interesting. I think you have to read. And if you view this video, sometimes you have to read between the lines a little bit. But anyway, that's not your job, right? That's the job of the investor who might take an interest in the company. So again, that was really interesting. Good luck for your endeavors. Yeah, I'm really looking forward to the drill program. Yeah, in the spring and on the results. But a smart investor, yeah, which I'm not, but a smart investor might consider to buy in earlier on before you come up with the results. Yeah, I think that's it for now. Thank you very much, Paul, for taking the time. And yeah, I will continue to watch the company and yeah, from time to time give an update to my subscribers. Thank you very much, Paul. Bye-bye.
Okay, thanks very much, Michael. Bye.